Hello traders, welcome to IPT Trading. First of all, for everyone, I am wishing a very happy new year. Okay. So on this new year occasion, I am going to discuss with lot of things today. So lot of traders doing very big mistakes with gaps. They are doing with big mistakes with gaps. So there is a lot of gaps. Everywhere you have a gap. Every 3 minutes will create the gap. Market will create the gap. So which one choose? What kind of mistakes we are doing? Which one is best? Which one is manipulation? Which one is best? Which one is the strong? So everything we are going to discuss today. The video going to be very interesting. So watch the video till the end. You will definitely learn lot of new things on this new year occasion. So let's dive into the video. See here is the common mistakes we are doing with gaps. See these are the common mistakes we are doing with the gaps. First of all, what is the fair value gap? First of all, what is the fair value gap? How it is look? What is the FVG? Everyone, maybe who are watching my videos from long time, they are know what is the fair value gap. You are new. If you are new to this channel, so make sure I already make a clear video on FVG. Go and watch it. You will be definitely clarified. Okay. I will give the brief explanation about the fair value gap. This is three candlestick pattern. We need three candles. So the first candle, here is the first candle and second candle and third candle. We have a three candles. So this is the candle number 1, this is the candle number 2, we have a candle number 3. First candle high and third candle low. Okay, between this first candle high and between this third candle low, if we have any space, if there is any gap, we can call it this gap as a fair value gap. So why this gap will be created in the market? Simple. Market will move with banks, okay, big players, okay, and hedge funds and institution. Not by you, not by me. So market will move with these persons. So if you trade with these people, if you go with these people, you will be safe. So how to find this where these people are trading? So this gap is footprint of the big players. This is the footprints of the big players. Simple. So if you follow gaps, you will find everything in the market. Okay, this is the brief introduction of the fair value gap. What is the big mistakes we are doing with these gaps? See, here is the fair value gap. So we are trade with every fair value gap. We are trading with every fair value gap. See, in the market, you get everywhere the gaps. You will get everywhere. Here is the gap, and here is the gap, and here is the gap, and everywhere you can get the gap. See, market is creating everywhere the gaps. If you follow every gap, you are going to be end of the gap, you are losing. See, market is everywhere, it was creating the gap. So which one we like to use? Which one we need to use it? That is the biggest question. So if you are following every gap, if you are just seeing this bearish gap, if you look for the sell trend, so end of the day you will be the loss. See, after these gaps also creating, market is moving strongly upside because you don't know which gap is strong. So don't try to take every fair value gap. Don't try to use every fair value gap. So see, in this situation, market is everywhere try to create the gap. See, market is moving upside. For suppose it will create the gaps upside and upside. Market create the gaps upside and downside. Everywhere it will create the gaps. Everywhere it will create the gaps. So which one we use? Everything is gap. Everything is gap. These all are the gaps. Don't try to enter with every fair value gap. This is very big mistake every trader is beginner doing. Okay. So end of the video, I will explain which one is confirmation gap, which one we can use it. I will take some live trades also. I will show. Okay, watch the video till the end. So this is a very big mistake. So and if see, second option is trade with mitigation fair value gap. What is the mitigation fair value gap? So simple thing is, here is the fair value. Just imagine here is the fair value gap. Okay, I will draw something. See, here is the fair value gap. So here is the first candle, the second candle, we have a three candle. Between the first candle high, third candle, we have a gap. So we know this is fair value gap. What is about the mitigation gap? So for suppose after getting this gap, market if mitigating this gap, it was mitigating with this gap with wick or body, doesn't matter. After mitigation, market is reversal from here. Okay, market giving reaction from this gap. For suppose, wait here, for suppose market is giving reaction from here. What is happening here? See, after mitigation also, market left some gap here. Market left some gap here, which is in this red candle. Market is great, left some gap, which is the color we use. Okay, market left the some gap here. So a lot of people is thinking, if market reversal from here, okay, if market reversing from here, come, and after that if it is close here, exactly if it is close here, they think this gap also very strong gap, it is also going to be work for us. This is the very biggest mistake everyone doing. This gap is going to be not work in price action. If there is any price action, there is any support and resistance, if it is mitigated by multiple times, this is strong confirmation, maybe market will reverse as per price action. But in SMC, if you have any fair value gap, if you have any fair value gap, market if mitigated even 1 point, even it was at the 1 point, after mitigation this gap will be a weak gap. That weak means there is manipulation gap, it will turn as a manipulation gap. So is gap not going to be hold your trade? Don't depend on this gap. If you are trading with this mitigation gaps, your risk trading will be risky. Sometime it will give one retracement, one reversal for you to trapping. For trapping you, it will maybe give one reversal. After that, market will reverse immediately, it will break down downside, you will be end of the trade lose. Sometimes there is a no green candle also, only this candle will suddenly end up as a next red candle, because this gap is weak gap. After mitigation gap, never use this. Okay, let me see lot of examples in the market, I will show you. Okay, I will show you the lot of example. See, here is what is happening. It is looking like very downtrend. Yes, simply it was a strongly bearish momentum is happening here. So from this bearish momentum, I will draw here. See what is happening. Here is the gap. After mitigation, basically this is the fair value gap. This fair value gap was mitigated by this green candle and give the reversal from this red candle. So after that, if you think above there is any gap, there is a left some gap, I will draw in very different color. So see, here is the gap in yellow line. If you think this gap will hold your trade, see it was reacting from exactly from here. If you take a sell trade, your end of the trade is loss, you are going to be lose. See again, here is a one more trade. See, here is the gap, here is the gap. See, this is the candle number 1, candle number 2, candle number 3. We have a gap on here. So in this gap, this green candle was mitigated. Immediately next candle we have a red candle. That means we have a reversal. After reversal, see, 1 second. After reversal, we have a some gap was left here. After mitigation, some gap was left here, which is in this blue color. See, which is in this blue color. So if you think this blue color gap will be hold your trade, no. See, even it was giving reaction, it will going to be fail. So this is once it was mitigated, your trade will be going to be a loss. It's not going to be hold your trade. I will show more and more examples. See, here is a one more example I will show. Okay, see, here is the fair value gap. This fair value gap mitigated and reversal. Okay, after that we have some gap was left here. See, in this yellow line, yellow color. So market is reacting from this mitigated gap and reversal also. You think it will move upside because market showing bullish strength here, bullish strength here, bullish strength here. So this gap also respected. You think it will move upside, but what happened? See, strong bearish momentum. Your end of the trade will be loose. So never use mitigation gap. Next one, the third one. You are believing in this manipulation gap. What is the manipulation gap? What is the manipulation gap? So lot of time I was discuss about the manipulation gap. Let's draw some picture first. So then I will explain. Okay, see what is the manipulation gap will be happen. So for suppose your target was finished here. For example, market is liquidity sweep here. Just imagine market was liquidity sweep here. It has to be moved downside. Market want to be moved downside. Before moving downside, if you have a below this liquidity level or any reversal level, any liquidity level or reversal level, if you have any first gap, it is the first gap. I already make a lot of videos on the fairway manipulation gap. Go and watch it. You can able to understand. See, here is the gap. Here is the fair value gap. The first gap always be a manipulation gap. What this manipulation gap do? It will give some reaction. Okay, give reaction and some reversal also. After that, market not hold your trade. Immediately it will chances to fail. Sometimes even you don't get this reversal candlestick also. Sometimes you will directly you will be lost. 1 second. What will happen? Most of the time after reacting this gap, everyone think the high was broken, the market will move upside. Here is the fair value gap, it was mitigated, so everyone think it will move upside, but not happen. Most of the time this candle go to break your this gap. It not going to be hold your trade because this is a manipulation gap. And one more thing, if you are doing trading opposite direction, for suppose trend is upside, it was moving upside. So if any gap was created opposite direction, for example, it was coming with lot of gaps from here. Okay, you are looking for call option from here. So after mitigating some extreme fair value gap on here, you are looking for call option from here. So what is happening? This candle exactly close at this level. For suppose at this fair value gap this candle was close. Okay, exactly it was close. After sweeping your liquidity, exactly it was close and giving some good reaction also. So what do you think from here? So maybe market giving gaps from upside also. Maybe it was as per your analysis, market was sweep the liquidity and respecting this gap also. You think maybe it will move downside, but not. Why? Because this gap is a manipulation gap. You are depending on the wrong gap, not a good gap. Maybe just maybe one candle will give reaction. Sometimes, not every time. Then market will move upside very strongly. So then market is moving upside very strongly. Sometimes even it not giving any reversal, without giving reversal, market will move upside like this. Your trade will be end up in loss. So I will show some examples also. So let's see some. I will try to show you a lot of examples. That kind of example you will get more from the markets. I will show you some example. Market is falling downside here. What is happening here? So here is the first gap. Liquidity was sweep here. After sweeping the liquidity, the first gap always will be a manipulation gap. Just now we discussed. After sweeping the liquidity, this will be our manipulation gap. This candle is giving reaction. See, I am drawing gap here. Which I will draw gap. This gap. Here is the fair value gap. Okay, we have a fair value gap. This is the candle number 1. This is the candle number 2. We have a candle number 3. So this is the gap. It was exactly reacting from your gap. Good reaction also. The strong sellers also here. What you think here? It will move downside, but already it was sweep the previous swing low. That means it is sweep the liquidity. It is indicating already I am going upside. This will be your manipulation gap. Don't depend on this gap. If you are depend on this gap, you will be a loss. See how strong candle will be formed here. Okay, and same example here. See, after again market was sweep the liquidity here. Here is the again one more gap. Okay, here is the again one more gap. I will wait. I will draw here. See, here is the one more gap also here. What is this gap is doing here? Okay, what kind of confirmation it is giving here? See, it was after sweeping the liquidity, first gap is always be a manipulation gap. It is exactly giving almost at the 50% level. What do you think? Again, you think it will be moved downside. Why? Because strong sellers, sellers. But it will be a bullish candle. Why? This will be our manipulation gap. Again, same example I will show here. In the same chart, market sweep this swing high. It is a liquidity level, and here is the reaction block. From this reaction block and liquidity sweep, market is moving downside. Exactly here is a one fair value gap. Yes, here is a fair value gap. This fair value gap reacting from multiple times. See, it is reacting and it was exactly reacting, but still market moving downside. So this is the way you are depending on the wrong gap. These are the manipulation gaps. So don't depend on the manipulation gaps. Okay. If you are billing on the manipulation gap, your trading will be a end of you are losing your trades. Okay. So next point is our. This is very important point which I want to discuss with you, because without liquidity sweep, if market creating any gap, okay, without liquidity sweep, market creating any gap, doesn't matter what kind of gap it is, doesn't matter how much confirmation you have, without liquidity sweep you have a gap, that is trap. Liquidity is king. So without liquidity sweep, if you have any gap, that will be a trap. For suppose, what is the meaning by that? For suppose liquidity was here, as per our confirmation, just imagine, I will draw here. See what is happening here. So let's see. Okay, see here. So without liquidity sweep means what? What you are doing here? For suppose it is moving upside. Okay, this is uptrend. Just imagine it's uptrend. Market was broken here higher high. Okay, breaking this high after higher high. It has to be sweep the liquidity, then only move upside. So what is happening? The liquidity levels will be here. Here is the extreme fair value gap we have, and here is the inducement level we have, our swing low, whatever you want you can take it. So these are the your liquidity levels in current market, in current present situation. These are the your liquidity level. But market without sweeping these levels, without touching this level, gap was created here. So here is a gap. In this situation, gap was created here. So what you think here? The trend is uptrend. Yes. So gap was created. The trend was above. You think it will work for you, but it never work. Without sweeping any liquidity, you will get trap only. Even its gap doesn't matter. Even it's any chart pattern, even it is candlestick pattern. How much confirmation do you have? It is going to be a fail. Is creating to sweep the liquidity. It is creating for liquidity. Okay, not after sweeping the liquidity, it was creating for liquidity. So it was lot of trades enter after mitigation this gap. Even it was giving good reaction to trap the traders. It is good reaction to the trap the traders. Then lot of people enter from here. It will come down and hit your stop losses. This is also work like another manipulation gap. Without liquidity sweep, it will be a manipulation gap. So we can discuss the last point, which is very, very important point. So simple thing, which one is our confirmation gap? Which fair value gap is our confirmation? We know just now all these are going to be a fail now. But then which one is giving good trades? Which one going to be win? Which gap we have to be believe on this? Simple thing. So before that going to confirmation gap, you need to know some rules. First, you have to be follow the all rules first. First, always follow the trend. Always I try to say this. First, always you find trend. Then it must sweep the liquidity. Okay, liquidity. Then we need confirmation gap. Confirmation gap. So these rules are very important. Without these three rules, we are not going to be find a confirmation gap. First, always be trend. Then we need to find the liquidity. Then only we need the confirmation gap. Without these things, without liquidity, without trend, there is a no confirmation gap. So you have to find the trend. So for suppose my intention is, for suppose this is uptrend. Just imagine this is uptrend. So your liquidity level will be here. That means, for example, this is your inducement level. Okay, or if you have any order block level here. Okay, you have any order block level here. So what you need? So market must mitigate this level first. Market must mitigate this level. Then if we have any reversal, That is after reversal, if market creating any gap, market creating any gap from here, this will be your confirmation gap, because trend is uptrend, the first liquidity was sweep, then market is creating gap. This is our confirmation gap. So you can believe this gap now 100%. If it is giving reaction from here 110%, next candle will be a green candle from here. You can buy confidently from here. This will be a green candle. So these are the confirmation. Without liquidity sweep, without finding the trend, and okay, without these things, you will never find a confirmation there. Again, I'm repeating, don't depend on every gap. Don't trade with mitigation gap. Don't trade with manipulation gap. Without liquidity, if you have any gap, don't trust them, because that is all a trap. Simple, the confirmation gap is after sweeping the liquidity with direction of your trend. Direction of your trend, if market creating any gap, that is the confirmation gap. So you can believe this gap, you can trade from here. I will show a lot of examples in the live market. If I possible, if you have any, if I get any opportunity, I will take some live trades. I will explain. Okay, please wait for it. This was my previous day result. So, and here is the today result. So I want to take some live trades today. Then I will explain the reason behind it. Simple logic. If without liquidity sweep, if we have any gap, see live example we are seeing here. Without liquidity sweep, any gap. Live example. Why? What is happening? Here is the liquidity level. Here is the liquidity level. But without liquidity sweep, gap was created here. See, market is how much it was reacting, but market is not reacting, not giving any reversal. Market want to move downside because this gap is a trap. So don't depend on this gap. Okay. So what is happening? See here. Here is the higher high was broken. After breaking the higher high, here is the first pullback. This will be liquidity level, and here is the fair value gap. Market was mitigated this fair value gap, and here is the extreme fair value gap. So if it is moving upside, this is uptrend. So this first gap will be your manipulation gap. I will change the color. In this blue line, this gap will be a manipulation gap. Even it was reacting, I am not going to trust to take the sell trade. If market creating any confirmation gap to upside, then only I will believe it. I wait for the confirmation gap here. After the confirmation gap, I take a call option. Otherwise, I am not dependent on this gap, because this gap will be a manipulation gap. Market already sweep the liquidity. So there is a chances to market move up to until this level. So let's wait to creating the confirmation gap. Then I will take the trade. So any point of you're watching the video, my content is, if you think my content is valuable, please do subscribe my channel and share with your friends. Okay, like the video. If anyone want to join my course, my contact detail in the description. Okay, just contact me in Telegram. I will explain everything about the course. If you want to join my public Telegram group, link was given in the video. Okay, simply, so see here, I take a one call option. I will explain the reason behind the trade. This trade, simple reason. Here is a one gap. What is this gap? So where it was forming, there is a fair value gap. It was mitigated. This is the liquidity. This liquidity was sweep multiple times. This liquidity was sweep multiple times. So market want to move upside, and it was created a gap. This is a confirmation gap. This is confirmation gap. So from this confirmation gap, I just take a directly trade. So now I have one more confirmation. I take a multiple trades from here, but okay, I lost here because of this big candle. As per big candle, I don't want to take the trade. Just I want to take a directly trade. No issues. After that, I take a multiple trades because of the past momentum. The place was here. Now what is happening? What kind of confirmation now I have? Here is the gap. This is the confirmation gap. This is my double confirmation, and my have a third confirmation. What it was coming from exactly resistance. This is my third confirmation. That's why I take a multiple trades from here. Even I lost one trade. Okay, no issues for me, because already market giving indication it is uptrend. It was sweep liquidity multiple times. Market give a confirmation gap and confirmation gap. So I take a call option. See, how much strongly it was moving upside. Even entry point is not good. So if you understand the liquidity, if you understand the gaps properly, if it 110%, you are going to be a win the every trade. Okay, I think you understand everything. Simply, it was a win. After this candle, I am not going to take the trade because if it is mitigated here, I have another opportunity. If it is not mitigated, I don't have any other opportunity. And I have a rejection block from here. We have a rejection block from here. That's why market is reacting from here. Simple. So even I lost here. I know I am going to lose here, but I want to take the trade immediately. No issues. So after even I lost here because of I have multiple confirmations, I take a trade. So just believe on confirmation gaps, that will give you more wins. Okay. Thanks for watching. If you like my content, do subscribe. If you want to join my course detail in the given in the description. Contact me in the Telegram. I will explain everything. Once again, I wish you happy new year, everyone. Have a nice day, traders.